My name is Dennis O'Brien, a Senior Financial Advisor with Assante Wealth Management. This presentation will explain a common misconception about income tax and go on to explain how tax brackets work and the difference between average tax rates and marginal tax rates. In my work with investors, this topic affects them most commonly when they are about to create taxable income by withdrawing money from RRSPs or RRIFs. They want to understand in advance the tax consequences of doing so. Some people have been led to believe that a withdrawal that takes your income into the next tax bracket increases the tax on all of your income. This is a misconception. We pay different tax rates on different parts of our taxable income. First, let's clarify taxable income. That's the amount of income on which you pay tax after you have deducted certain expenses that are not taxable, such as RRSPs, union dues, support payments, moving expenses, etc. Using round figures, the federal government charges 15% on the first $43.5 thousand of taxable income. In addition, they charge 22% on any of your taxable income that falls between $43.5 thousand and $87,000. And then they charge 26% from $87,000 to $135,000 of taxable income, and finally charge 29% on taxable income over $135,000. The four levels in the above list are referred to as tax brackets. Provinces charge taxes in addition to federal taxes and have tax brackets different from the federal government. This is an example of the federal tax calculation for a taxpayer who has $75,000 of taxable income. $43,561 of their taxable income is in the first tax bracket and is charged 15%. But $31,439 of the $75,000 falls in the next tax bracket, so that amount is charged 22%. The amounts from each of the two tax brackets are added together and the taxpayer pays a total of $13,450. $13,450 is 17.9% of $75,000, so this taxpayer's average federal rate is 17.9%. However, their marginal rate is 22%, meaning that if the taxpayer earns $100 more taxable income, the federal tax on that additional $100 will be $22. So recapping federal tax rates for 2013 in our example, 15% on the first $43.5 thousand of taxable income, plus 22% on the next amount of taxable income up to $87,000. Recapping the conclusions that we draw from this, the extra $31,439 of taxable income does not cause all $75,000 to be taxed at 22%. Only the $31,439 falls into the next tax bracket and is taxed at the marginal rate of 22%. The first $43,561 stays in the first tax bracket and is taxed at 15%. At Assante Wealth Management, we believe strongly in the value of advice. For more information about wealth management issues, please visit dennisobrien.ca.